Welcome, all my friends and family, to all my young adults. I got a real good company that we're breaking down today. Yes, go ahead and share this out. Like it, send it to your friends. All my young adults, we're still building out that young adult ministry that's teaching young investors how to invest in the stock market. Yeah, you guys can get a real good company now. I'm going to show it to you guys later on in the charts. You guys can get this company at a steal right now at a low. You guys can start putting this company in your portfolio. Start buying fractional shares in it. And you're going to be sitting good because you can get it at a steal. And that company is none other than Eli Lilly. Ticker symbol LLY. Ticker symbol LLY. What do Eli Lilly do? Well, Eli is a global pharmaceutical company focused on cardiometabolics, diabetes, obesity, oncology, immuno oncology, and neuroscience. And as you guys can see, this is the top drug making company in America. Something that's always going to be needed because of the food, of everything that America's feeding their people. This is the type of company that you guys need to have on your radar and start investing in because they invent drugs for the American people. If you look on the screen, these are some of the top drugs that they invent, but it even goes deeper than that. These drugs that I'm talking about is flagship drugs, drugs that people need, drugs that people have to have. And some of these are just the tip of what this company do. Yeah, they sell in 90 to 125 countries, mostly through wholesale and direct channels like Lilly Direct. Yeah, you can get a direct channel to get any kind of drug you want with this company. Yeah, this is a great company. Their balance sheet of uh, last that I researched in 2025, their assets was 112.5 billion big ones. Their liability was about 85.9 billion and their equity was about 26.5 billion. Their cash equivalent as of December 25th was 7.3 billion. That's with a B, cash. Hard code cash sitting on the side. You guys know I always like to talk about how much a company, how much cash they got on us here. Yeah, 7.3 billion. Their current assets, check this out, is 55.6 billion. Yeah, they got big chunks and receivables, inventory, prepaid expenses. Yeah, this is a cash flow company. And you guys can get it for a steal. Right now, their debt profile as of December 25th was 42.5 billion. Their short-term debt was 1.6 billion. Their long-term debt was 40.9 billion. And a lot of that debt is because of their research and development. When the pandemic happened, who did they call on? Company just like this. The big dog, Eli Lilly, ticker symbol LLY. So they run with net debt in the mid 30 billion range, meaning they are clearly levered, but against a huge earning base. They got a huge earning base. Why did they carry debt? Glad you asked that question. Funding and research and development and capacity. Massive spends on obesity. Everybody in America is out of shape. Diabetes all over America. Pipelines, manufacturers. Yeah, building out for injectables and global expansion. When you really look at medicine, they really don't. They have the ability to cure diseases, but these are billionaires. They ain't worried about no cure. The money ain't in the cure. The money is in the drug. As you guys can see, I gave you a few drugs that this company have famously did the research and development on it, and now they're making billions off the American people. Yeah. So they carry debt mainly because research and development, their acquisition and licensing, they're buying up smaller biotech companies right now. For the right to promise drugs rather than equity. Okay? This is the type of company that you guys need to be thinking about, because this is what I call a pure cash cow. You guys can get it. You guys can start buying fractional shares right now. And in about a year now, you're going to be sitting good, because this one has went way down. We're going to look at that in just a second. Before we get into the charts, I'm going to get into the charts in just a little bit. But what does the bull say about the company Eli Lilly? Well, the bulls like them because explosive growth has taken place in the last couple years in obesity, diabetes, and all these drugs that has been popping up that they're creating, and they're making billions of dollars on these type of drugs. Matter of fact, if you don't have insurance, you're in a big time bad way, because these drugs cost a lot of money. They make high margins. That's why the bulls like them. And that's why I like them. They got high margins and cash generations. Their net margins is 35%. Strong free cash flow. And repeated earning beats. Yeah. When people run out of drugs, guess what they got to do? They got to buy them again. And they use them up. When they run out of drugs, they got to buy the drug again. This is what you call reoccurring cash flow in the biggest company out there, Eli Lilly. Yeah. Analyst sentiment major of 45 analysts rate it a buy, with consensus price target below the current level. I'm going to show you guys in real quick when we jump into the charts where you can get this at. And I don't only like to give you guys the bull's perspective, but I always like to give you guys the bear's perspective on why they say that it's a terrible company to invest in. But I don't see how it could be a terrible company to invest in when you got recurring cash flow off the American people buying these drugs over and over again. They ain't never going out of business. But the bears say uh, the valuation of the stock is rich because the PE is 30 times. So a lot of future success is already priced in. That's what they say. Yeah, they say that concentration, it's a concentration risk. Heavy dependence on these type of drugs that's right in front of you is they claim that it's a safety issue. And it's and these drugs will always be in competition with other smaller drug creators. Yeah, but when you the big dog, you could buy the small guys out. But that's what the bears have to say, okay? They talk about the bears say that their regulation and reimbursement is a big risk, okay? Because you know they have to take sometimes when they create a new drug, they have to take it before Congress and the Senate to get it approved before it comes to the American people. But guess what? That ain't never stopped the billionaires from doing what they do. Yeah, they'll send lobbyists in there, and next thing you know, that they'll pay that little underground money that we never see, the American never see, and guess what? That a drug appears on the market. But the bears, they do have good points. They do have good points. Okay, uh, they say that their debt and capital intensity, big manufacturing and research development means that they must keep executing flawlessly to justify leverage and uh, they got a point. You know, they do have to stay on top of their research, invest, and in their development because this is the type of company that he is, that there is. So, uh, I just like this type of company because I see it as a company that American people already need, that the American people is already buying, and it's their drugs is soon as the American people run out, they got to buy them again and again and again. So we're going to just jump into the charts a little bit. Uh, I like this company, but I want to let you guys know that you guys can get it at a steal now, buying fractional shares. This is not financial advice, but this is a great company that you guys can start putting in your portfolio right now. Let's go ahead and open up the charts a little bit. Yeah, let's go ahead and dig in a little bit. I like this one here. Mm-hmm. Eli Lilly. I'm going ahead and pull me down here out of the way so you guys can start seeing these charts. And let's click on Eli Lilly. Let's click on there real quick. Boom. Okay, I always like to take you guys back a year ago. And then I'm gonna bring you back up to date. But a year ago, you could get this for what was that, an all-time high a year ago at $1,249.45. Y'all see that on the all-time high up there, right up there. I don't know if yeah, I think I'll just move it like this so y'all can really see it good. Yeah, 249.44. Okay, then I want to take us back. Uh, that was year to date. Let's talk about 6 months ago. 6 months ago, it even had ran up to $2,080. 6 months ago was the all-time high. But a year ago, President Trump started coming in, and we can start seeing the trajectory down. See the trajectory down. Let's go ahead and look at 3 months ago. 3 months ago, right here, guys, you guys start seeing the travel down. Actually, it fell all the way down to $840.25 3 months ago. One month ago. As we flip it around, we can still see uh, it's not at no all-time high, okay, but it started dropping, guys, and it started dropping. That's 1 month ago. It started really tanking down, still really tanking down. Actually, it fell all the way down to $1,135. I had that marked off a whole month ago. Now let's look at 5 days ago, guys. 5 days ago, right up in here. As you guys can see, 5 days ago, we had a drop off right here, and it fell down to $1,034.24. And then it tried to rally back up, and it rallied all the way up to a high of $1,180. But then it went sideways. Okay. Now, this is why I say you guys can start getting in fractional shares. It is July 19th now. And we looking at 5 days ago, I start seeing a big drop right here. This is why I say you guys can start getting this right here. It fell all the way down. Let's look at today. Let's look at what it closed off today. Today, it continued to drop down. This is July 19th. And look at the trajectory down, guys, all the way down. And it closed off today at $1,143. And I'm trying to tell you guys, if this is an opportunity to buy this right now, you need to put this in your portfolio before Christmas, because if you can get it at $1,100, if you can get this at $1,100, I'll put that in my portfolio. I'll buy fractional shares in it at $1,100. Anything under $1,140, you guys start putting this in your portfolio. This is a win-win, because as you can see, if we start opening up the charts, it's not going to stay down too much longer. But it fell all the way down, and we're at after hours right now. It is starting to creep back up already. I look for this to run sideways, guys, for a little while. I look for it to run sideways. And like I said, if you guys can get it, guys can get it at a premium price right now. Yeah, you guys can get it at a premium price. This is the time to buy. We buy low, we sell high. But this thing is going to turn back around. I think it's going to turn back around Christmas. I'll give you guys another update around then. But this is the time between July, we're going into August and September, which is typically the worst months of the year. We should see this drop down maybe to 1,100, maybe under 1,100 by then. And then, going into winter, everybody's going to start getting sick and start sneezing, and they going to need what? Drugs. Yeah, that's when the pharmaceutical companies make a lot of cash when winter comes. Yeah, and everybody's sick and they start buying drugs. And a company like this, Lilly, is a great buy. I'm going to go ahead and open up the fear index before I close off. I always like sharing the fear index and the country as we look at it, the United States of America. We're still in fear, guys. The fear index is down to 40. It was up to 43 yesterday, dropped back down. And we're going into, I look for the fear index to August and September. I look for the fear index to drop on down a little bit more, down into about 35, 37. But then after that, August, September, I look forward at the fear index. Everybody start buying. Everybody going, people gonna start getting back into the market, and then you're gonna see a turnaround. This is not financial advice, but I just think you're gonna see a turnaround come around in the month of December with this company, and everybody that didn't get in back here, yeah, everybody that didn't get in back here, it's gonna get over here and it's gonna get in greed. And then going into next year, probably right after the Super Bowl, because it's gonna still be cold, it's gonna go extremely greed over here. This is too late to buy. The price that you guys can get it now will be no longer when they get over an extreme greed. Because we saw that all-time high of 1,280 per share. You guys can buy fractional shares. It's down right now significantly, but it won't be there forever. Now, this is not financial advice, but you guys can do me a favor. If you like this type of education, subscribe, share them out to your friends. Yeah, share them out to your friends. Put these videos out there. It helps my algorithm out, guys. And, I'm just going to be working on another video. I'm working on one right now. I kind of got some things broke down that I'll be bringing you guys another one. So I'll talk to you guys soon. Love all y'all. See you in the next video.